this edition of Ask the Expert, we're speaking Australian banks with our senior banks analyst, David Ellis. Now, David, you're back after a few weeks out, so we haven't had the benefit of your insights for the recent weeks, but welcome back.
Thanks, Glenn. Thank you.
And now we've had some interesting developments within and when have we not, but within the banking space lately. And you've just recently put out a note talking about Commonwealth Bank, which that you've really marked this upcoming earnings season, which they're due to report in August, is going to be quite a crucial turning point for CBA. And why is that?
Well, they've obviously had a very challenging 12 months, 18 months, with profits down in the 2018 year, and this year, 2019, we expect their profits to be down another 10, 11%. So on the face of it, that's not a good result, and it's not a good result. But a lot of the main reason for that decline in profits for this year is to do with significant customer remediation costs that have been recognised. Now, we don't expect those to repeat as much in 2020 and later years. So we're looking forward. We're looking past the 2019 result, and we can see a lot better times ahead for the Commonwealth Bank, and starting with the 2020 financial year, with a reasonably strong recovery in earnings in that year, which will flow through to modestly higher dividends, which of course a lot of our investors are very much interested in.
Now, Dave, you're talking there about the costs, but it's also interesting to note the share price movement that they've seen since the end of last year, up 18%. How does that juxtaposition occur?
Well, obviously, during 2018, the Commonwealth Bank and major bank peer share prices suffered heavily partly due to the Royal Commission, the outcomes coming from that. But we have seen a big turnaround in equity markets globally and in Australia since the end of 2018. And Commonwealth Bank has benefited from that and led the increase in the ASX 200 over that period. And it's primarily due to the recognition that the problems experienced in 2018 are not permanent, and that the Commonwealth Bank's very strong consumer and business banking franchise will deliver pretty solid earnings growth once the bank gets through the current problems with heightened regulatory oversight and additional costs from the customer remediation.
And given the importance of mortgages within Australian banks, and that's an area that's had a lot of movement lately or in the last 12 months. APRA regulations have changed and then changed back again. And how has that played in? And it's interesting that CBA and Westpac still remain your preferred picks within the Australian banks.
Yeah, well, a lot has happened in the last 6 months that affects the mortgage market in Australia. Of course, we've had the surprise election result in May, and we've seen interest rates cut twice by the Reserve Bank. Now the cash rate is at a record low 1% level. We've seen the major banks pass through about 42 basis points, 43 basis points of that 50 basis points of cut, which is a positive. As you noted, the APRA has eased certain restrictions on lending criteria, and we have seen stabilisation of house prices. So they all combined to provide some positivity for the future. For the housing market, and of course with Commonwealth Bank being the largest lender in Australia with the largest market share will benefit disproportionately from that. Same with Westpac, and I like Westpac. It's trading around about 10% below our fair value, whereas Commonwealth Bank's trading at our fair value, a little bit above our fair value. So looking at a value basis, Westpac's our preferred major bank, but looking at quality, then Commonwealth Bank comes into the picture.
And probably at the other end of the spectrum is the National Australia Bank, and we've had some big news from them that's just come out just today that they've announced the appointment of the new CEO. I know it's very early days, but What sort of an impact could this have across the business?
Well, a positive impact, I think, is the short answer. Ross McEwen, he's well regarded. His most recent roles were the CEO of the Royal Bank of Scotland in the UK, and prior to moving to the UK, he was head of the retail business at the Commonwealth Bank here in Australia. So he's got a lot of experience in banking, and particularly his role in the UK, dealing with the fallout from the GFC, dealing with intense regulatory oversight, political complications. He's very well regarded, and his experience will place him in good stead. National Australia Bank experienced a really tough 2018 and with the Royal Commission. And we saw that the result of that was the resignation of the CEO, Andrew Thorburn, and the announcement that the current chairman, Dr. Henry, is intending to resign as chairman. So what we're going to see, we've got National Australia Bank will have a new chairman, Phil Cronican, and a new CEO, Ross McEwen. I think those two executives complement each other. They've worked together in the past at RBS, Royal Bank of Scotland. Ross McEwen may not start until April 2020, and then it'll take at least 1 to 2 years to really get a good gauge of whether they're making a difference and executing successfully and driving change and driving improvements across the business.
Sure, we'll keep an eye out for the more detailed assessment of that, which should be landing soon on the Morningstar website.
Thank you. Thanks, Barry.
Thanks, David.
Thanks, Glenn.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.